We got a lot of holidays coming up. Start seeing a lot more lighter trading volume potentially. Have a bit more volatility in the markets, but markets tend to perform okay. This is why November, December tend to be typically the stronger months of the year as momentum carries the market more than anything else. Earnings-wise, technology and energy and financials, the big winners in terms of earnings this quarter. Discretionary staples, the others overall kind of lagging the index. Overall, the blended rate of earnings growth for this quarter is around 11%. So again, it's been a decent earnings growth quarter. And again, as we stated before, coming into Q3 reporting season, estimates were a little bit low. So again, it was not surprising. We had a very high beat rate for earnings. And with that, of course, we've seen about 11% earnings growth for the quarter. So again, good enough to support markets, good enough to support valuations. But again, not surprising coming into the cycle that, markets have been running really, really hard since that April sell-off. So again, over the last couple of days, we've seen a little bit of weakness in the markets. We haven't seen red days in a while. And so when there's some red days in the market, we start valuations, this thing, that thing, the other thing comes around. Just take a breath here. Markets are just having a bit of a pause here. Nothing really crucial about that going on. Outside of that, there is a Supreme Court ruling coming up that could affect tariffs. Right now, poly markets are only expecting about a 35% chance that the Supreme Court rules in favor of tariffs. Now, here's the potential issue. Tariffs are a tax, and taxes should be passed by Congress. We don't know what's going to happen yet, but when the Supreme Court rules on that, if they happen to rule against tariffs, there's going to be some potential consequences to think about. First of all, the tariff revenue may have to be refunded. That could lead to lower prices for households, maybe not. Typically, once prices are established, this is kind of the thesis about inflation, higher or lower inflation. It's like, oh man, if we get inflation down, prices will come down. Prices typically stick. Even though the tariffs may get refunded, we may or may not see lower prices coming into households, but that's the expectation. Remove the tariff, lower prices for households. We'll see if that works out or not. The bigger question will be really for the stock and bond market. Is there any impact there? The removal of the tariffs obviously would be a boost to producers, obviously taking off that impact to their revenue. So we could very well see a lift to asset prices in areas where tariffs are the most prominent, particularly in the manufacturing impacted by tariffs. Think automakers as a good example. Technology as well may get a boost. That's be something worth paying attention to. What we've seen here in terms of earnings season so far is that beats are not being really well rewarded, but that's only because a lot of these stocks have had huge runs going into their earnings announcements. Not surprising, it was kind of a bit of buy the rumor, sell the news. I think we'll probably see the same thing with NVIDIA. But overall, despite that, and we've had a lot of headline, people are starting to wake up to valuations. Ladies and gentlemen, all we've done so far is pull back to the 20-day moving average.
Catch me daily on The Real Investment Show. The link is in the description.